the idea of a 50-year mortgage is actually being floated very seriously. So it was introduced a couple of years ago as well, but now they're taking it very seriously. President Trump has initiated it, and they are looking to introduce a 50-year mortgage into the market. So typically, a 50-year mortgage is now going to increase your total interest paid on the loan. So right now, if you get a 30-year, you're paying roughly around 1.5 times your principal balance if you took the entire 30 years. Now, it's very, very important to understand, if you took the entire time period to pay off the loan, that's how much interest you'd be paying on based off the principal. So, and a 50-year would increase that to roughly 2 to 2.5 times, depending on the principal amount. So, if you buy a house for $500,000, by the time you pay off that house, you'd most likely have paid $1 million in interest over the course of 50 years. So it's not 30 years, so it's 50 years. But you can definitely lower that if you continue to make additional payments on your principal. And this is why I think this actually might be a good idea to implement. It's a good option to have, and that they're introducing the 50-year mortgage. So first of all, 50-year mortgage, the way I see it, is that this is going to be a great entry into home ownership for buyers that just don't qualify on the 30-year or the 15-year that's currently available on the market. So what this does is this is going to lower roughly a 50-year mortgage is going to be 15% cheaper than a 30-year mortgage on a monthly basis. So this will definitely qualify you for a higher loan. It'll qualify you for more house. And after that, the responsibility is rested on the buyer, because you have to make sure that whether it's a 30-year, 15, whichever type of mortgage you're taking, you want to make sure that that mortgage payment is affordable for the foreseeable future. Of course, you don't know if you're going to have a job in 5 years, 10 years, God knows what's going to happen, but at least for the foreseeable future, you're secure. The payment that you're taking on, you can reasonably make it. Now, the 50-year mortgage is a great opportunity for you to step in to home ownership, because what you can do from there is you have a couple of options. One, you can stick with the 50-year, pay additional on principal. So currently, if you do a 30-year, pay additional on principal. So instead of making 12 payments a year minimum, you do the 12 minimum payments, plus you do an additional one payment. So if your payment is $2,000 a month, times 12, you made $24,000, but you can go ahead and pay another $2,000. So that's a 13th payment. And that goes directly towards principal, and you've paid down your house in 22 years. That's the math on a 30-year. So you can do the same on a 50-year. Nothing is stopping you from paying off that loan in 3 months. Let's say you hit the lottery 6 months after you got the house. You can go ahead and pay that off. So you've only paid interest for those 6 months, not 50 years. So very important to understand that you can still make direct principal payments on the 50-year mortgage and bring that down. So if you do your math and you use an amortization calculator, and you can see how fast you can actually pay down that house based off of how much additional principal you're paying down. Next, the other option is that you take the 50-year mortgage, you get yourself into the house, and within about a year or 2 years, when you see that the interest rates are more favorable in your position and to your finances, and that maybe your income went up, you got a better position, you got more pay, whatever it might be, you can always refinance this loan down to a 30 or a 15-year, and then still continue to make additional principal payments on there. And you can typically have this paid off relatively faster than 30 or 50-year mortgage periods. You should not be buying a house thinking I'm gonna have this loan for the next 50 years or the next 30 years. That I tell that to all my clients. You're purchasing a home with a 30-year mortgage just to get in, and then your goal is to pay it down as quickly as possible, whether that's 10 years, 15 years, 20 years, whatever it might be. So same thing with the 50-year. All it does is it's going to help you get your foot into the door, get into a home today or in the next 3 months, the next 6 months, rather than waiting another 2 or 3 years, because home prices continue to appreciate over time. So this is going to require strict financial discipline by the buyers. Yes, there might be people that are going to mess up. They're going to go into foreclosure, and that would have happened whether it was a 30-year, 15 or 50. It doesn't matter what type of loan they took. It would have just happened. However, I don't think this is a solution for the entire affordability problem that we're having in the housing market. I definitely think this is at least one step towards helping people get into homes and become homeowners rather than renting. Because if you do the math, and between a mortgage payment of $2,000 a month and rent for $2,000 a month, both, doesn't matter how you look at it, whether it's a 30-year or 50-year, and you paid rent, let's say, for the next 30 years, at the end of those 30 years, you own nothing. You've paid those 30 years of rent to someone else, and they've built equity. And same thing goes for 50-year mortgage. So what this does is lets you purchase a home. So in 30-year time, not have you only pay down the house, but you also now have the home is like a forced savings. You have equity in the home. And over the course of the years, of course, the equity will go up. The price of homes will go up and down, up and down. But typically they will end up appreciating because a home is an asset. It's a roof over your head. It's a necessity. So all necessities eventually go up in price. So it's a long game, but you have to be financially disciplined. And this is what I'm going to teach my clients. And this is what I'm going to advise them, is that not to just lean towards 50 completely, but this is another option in the tool belt for first-time buyers or any buyer buying a primary residence to use in order to get the home that they want, to be in the area that they're looking to be in, whether that's closer to their job, to schools, whatever it might be. I believe this is a great step and a great tool to have in order to qualify for a home. Let me know what you think in the comments below.